So we don't know who owns Canada?
We don't know who owns Canada.
In the middle of a huge housing crisis, we're investigating the role of big corporations.
We're not tasked with building deeply affordable or social housing. We're in business.
They're sometimes called financialized landlords. So what happens when they're the ones buying up old buildings?
The buildings are still there. They're just no longer affordable.
It was affordable for us, but now they're not affordable anymore.
What's the cost and who pays when giant corporations move in? Not here, not now. Every time these renters protest what they call punishing rent hikes, this is the line they say they hear.
Like carrying on with our
will
conference.
BSD withdraw the above guideline rent increases?
Sorry, I don't think this is the time with the police.
When protests outside their Toronto apartments didn't work, they started showing up at the offices, interrupting board meetings of the companies that own the buildings.
We are tenants of Thorncliffe Park.
The more than 80 residents from 3 Toronto buildings have also now been on a rent strike for over a year. Still, nothing seems to change, and something needs to change.
Our landlord has appealed for big rent hikes that will force people out of their homes.
Halil Alibi is at so many of the protests because he says for him, there's nothing left to lose.
Every time when you go for a grocery, the first thing you think, not about the wallet, you think about the rent.
He searched outside Toronto and still cannot find something he and his family can afford. And he admits sometimes his thoughts are extremely dark.
A lot of homeless living at the park, and some of those huge tents. But honestly, I speak to myself, oh, those people are lucky. They don't have pressure to pay the rent. For us, the rent is a pressure. Mm-hmm. Those people are lucky. They're living their life no rent.
Imagine thinking people without homes might be better off. The Canadian reality is rents here have increased 22% in 2 years. Canada now ranks the lowest in terms of affordability of all the G7 countries. But why? Some believe a lot of it has to do with who owns the buildings and what they do with them.
We're losing affordability.
Martine August, with a PhD in planning, has been chasing those facts for years.
We ran the numbers in Toronto and found that in 2020, for example, financial firms bought 90% of all the rental housing units that came up for sale. And so they're really consolidating ownership.
August says in Canada, the biggest financial firms own close to 400,000 suites across the country. That's nearly 20% of the purpose-built multi-family rental units, and she thinks that might be an undercount. So, big firms own rental buildings. So what, you ask? Well, Martine August isn't talking about companies that own and run rentals as their full-time business. She's using the term financialized landlords, firms with investors that buy up housing stock as an investment, large private equity firms, real estate investment trusts. We're talking about Starlight Investments in this story because that is Halil's landlord, but there are many others. And what worries some is that these financialized landlords tend to buy up older buildings with lower rents. We're talking about affordable housing. And then they find ways to make those assets, those buildings, profitable for investors. Martine maintains this is where it gets rough for renters. It just stops being affordable housing. Again, she's done the math.
Financial firms are raising rents higher than other types of landlords, including large chains. And what we found was that on average, after a financial firm acquires a building, they increase the eviction filing rate by 3. They triple it.
Move out old tenants, then raise rents on those now empty units. When she says that's the business model, she's not making an idle comment. Consider Starlight Investments. It's the largest landlord in Canada and has over 54,000 units. Its own promotional material for investors lays it out, referring to buying buildings with below market rents at the time, and in one case saw rents increase by $411 per month. These papers that are in front of you are because this is how the companies describe their business model. And I'm wondering what you see in there. What stands out?
So this shows quite clearly the impacts of this repositioning strategy, this approach to making money for investors that these types of firms use. It's coming at the expense of affordable housing in Canada. And I said, this is one building, right? This company has repositioned hundreds of properties in Canada. And so the net effect of that is rents are rising.
Profits come when units are turned over and renovated. For tenants who can afford to move into updated units, they look good. Here's one in a building owned by Starlight Investments. It's the building Halil happens to live in. His apartment looks nothing like that.
Oh yeah, that's all water damage, and they just painted over it.
Yeah, and they don't care at all. Even like for this, it was broken for a while to open it. It's just, everything is broken. The water comes from this way.
Halil insists older units like his are treated differently than newer ones with much higher paying tenants. His feeling is that the company just wants to push people like him out.
If anything will be broken or damaged in new units, they will do it in proper way, 5 stars, absolutely. But for us, garbage.
And so you're taking a risk with the rent strike, right?
Yes, because I want better.
Does it make you nervous, though, that you're
No.
taking that risk?
No.
Without financialization, you will hardly have any landlords.
We uncover opportunities to deliver superior returns.
Over the months we've been following the story, we repeatedly asked Starlight for an on-camera interview, but the company declined our request. So we reached out to this man, Michael Brooks, the CEO of RealPAC. That's a trade association of real estate investment and development firms, Starlight Investments among them.
You know, you talk to people who live in some of the units in Thorncliffe Park, for example, where you've seen those rent strikes, right?
Yeah.
And they talk about the above guideline increases that they just flat out can't afford, and that the trend line is that the LTB approves them, and they're stuck. What are they supposed to do? Because they will
Yep.
tell you that they see that the common areas have been renovated. That's great. They see new units being renovated. That's great. But their cabinets are falling off the walls, and they've got water damage, and they've got holes, and they can't get anyone in to fix them, and yet they're paying the above guideline increases.
Yeah.
The frustration builds, right?
I personally doubt a lot of those stories from the big landlords. Remember, when you get
I've been in those units. I've seen them, and I've sat with them.
So the big landlords run their apartment buildings with a ticket system. If you've got a complaint, you fill out a ticket. That ticket gets archived in their software system, and then someone gets engaged to fix that. So that's the way it should run.
Supposed to work.
That's the way it's supposed to run in the larger buildings. The above guideline rent increase approach is adjudicated in Ontario.
That's exactly what Starlight told us in an email. They also said they care about their residents, and since 2019, they've invested more than $28.5 million in capital improvements to these buildings.
90% of the buildings in this province are over 45 years old. If your house was 45 years old, you're on your second roof, your second set of windows, new door, new furnace, new air conditioner. It's the same with apartment buildings. They don't care who owns them, they depreciate. And it takes a lot of money.
Another building, and this building, and this building, and all the area, it was affordable for us. But now, they're not affordable anymore. For us to leave from here, there is nowhere to go. What can we do?
Halil points to 3 buildings now owned by Starlight Investments, including his own. The money landlords say is needed, tenants like Halil say shouldn't come from them.
100% sure if they will take that easily from us, they will bite again and again and again. They will keep going. That's why we try to make ourselves close and stick together.
Here's another number Martine August wants you to consider, 550,000. She says that's an estimate of the number of affordable housing units in Canada that have simply vanished over the course of a decade. Where'd they go? Well, the units themselves still exist. They're just no longer affordable, have been turned over, are now priced out of reach. So just as Canada brings in more people and talks about building more affordable housing, the reality is units that already exist are slipping out of financial reach.
I think people watching this know exactly how that looks when they go searching for an apartment and can't find anything within their price range. The buildings are still there, they're just no longer affordable. This is a neighborhood in Toronto that has historically provided a lot of affordable housing.
This is Parkdale. It's also where 10 years ago, Martine August began studying the housing crisis.
There started to be a change that I noticed around 2014 when firms started to buy up properties in this neighborhood and start to sort of forcibly gentrify entire apartments. And these were financial firms.
And by gentrify, what do you mean? Because some people will hear that word and think, oh, they're improving them.
We're standing in front of one of the first buildings where this was happening. This building was bought by a firm in 2012. And what they started to do was get units empty. They were doing all sorts of aggressive property management strategies. So turning off the water, turning off the electricity, engaging in really noisy and disruptive construction projects that were kind of driving people crazy, ripping the balconies off, and trying to push people out.
If Martine can pinpoint the change to the 90s, what was happening? Well, it turns out the federal government stopped investing in subsidized housing in 1993. And then, in 1997, Ontario introduced something called vacancy decontrol. It meant once a unit was vacant, landlords could increase the rents however much they wanted. Big incentive to get people out of units. And absent a regulation to say they can't, I can see a private company saying, listen, it's legal, it's open to us, it makes good business sense for our shareholders. Why not?
You're really underlining why we need more regulation to prevent this kind of thing. Why not? I mean, it's violating the right to housing.
Fight! Housing is the right.
The right to housing. You may have heard that phrase again and again. In 2019, Prime Minister Justin Trudeau announced that housing would be considered a human right in Canada.
Our government recognizes that housing rights are human rights. Everyone deserves a safe and affordable place to call home.
But what does that actually mean? Michael Brooks say there is no clarity on that at all.
Look, the human right to housing is a government obligation at the federal level. And I've gone back to the UN source documents on this. The position, for example, the Federal Housing Advocate is that don't make it worse for us by evicting people.
Right.
I get that too. But we're running a business. We might have violent people, we might have people who don't pay rents for a year and challenge us to take them to the Landlord and Tenant Bureau. We may have people damage the units. We need to have eviction as a remedy. But there is zero literature in this country on what's the private sector obligation. We've offered to engage with the Federal Housing Act. Let's define this. What does this mean for us in the private sector? Because we're in business. We're not a social agency. We're not tasked with building deeply affordable or social housing. We can't be there. We're in business. Let's draw a line between these two. You do this, government. We do this. That's it.
So here's where Michael Brooks and Martine August agree. If you want affordable housing, governments have to get involved again. But for Brooks, making it tougher for private industry to invest in Canada's housing market would make the crisis worse.
I would imagine the only thing that makes large corporate entities move out of the space is that it's no longer the sort of climate where it makes business sense to be here.
Yeah, but who's going to buy the units then? Who's going to buy these buildings? This is a multi-trillion-dollar asset class. Who's going to write that check? Mm-hmm. And after that, who's coming to this country to build anything with that kind of a, I've called it Marxist, the scent of Marxism. I mean, you want this to be East Germany in the 60s? There you go. Have them nationalize it.
Fundamental philosophical and financial interpretations of the place of housing in this economy, and no solutions on offer that could possibly come quickly enough for the people in crisis right now.
Just to find a cheaper and safe place than here. But for us, where we can go, we just keep asking myself, where we can go? What's that? There's nowhere to go, nowhere at all.
Over a year, that is how long Halil and the other Thorncliffe tenants have been on their rent strike. It cannot go on forever, and he's facing an eviction application now. If someone else sees a way to live affordably in this country, he says, he's ready to try it, to try anything.
As would-be buyers chat with builders at the Mississauga Home and Condo Show Sunday, news that Canada's key interest rate is now 4.25% is a welcome development to some. Another small drop after the rate had been held at 5% for nearly a year until June.
It's a very positive news, and the way I see is that this is the buyer's market. Now the buyers who were sitting at the fence for last almost 2 years, they have the opportunity to jump in. So it's a win-win for the buyers and the builders, and it's very healthy for the market.
But Realtor Tom Story doesn't think the rate cuts will have an immediate impact after home sales have been declining throughout the summer in Toronto.
I think people are now at least having conversations. We've noticed maybe like a slight uptick on showings on our properties over the last week or so, but it's still going to take a lot more for the market to really pick up.
While people might think lower rates mean buyers would come back, he says it could also make sellers think twice.
A few people that are selling right now because they were on the variable rate might think, okay, well, if I can't get my price, I'll just take it off the market. So that could actually bring inventory off the market, and that in turn could balance things out a little bit more.
Over the summer, condo sales have also been plummeting in Toronto. One expert says there are problems top to bottom.
It's a very broken market that we're in right now, where you really no part of the equation is working. You are seeing right now, no one can afford to build, no developer can afford to build anything that anybody can afford to buy or rent in this market.
He says the drop in interest rates isn't enough to fix a sector being battered by a host of other factors.
Building costs and materials and labor, land costs, probably the biggest factor of them all. These things are just not lining up to the way that we can build anything.
Looking ahead to the fall, the Bank of Canada says more cuts could be on the horizon.
We haven't landed the economy yet. The runway's in sight, but we have not landed it yet.
Those further reductions could help the market get back on track.
The overnight rate might get down to 3.75 going into 2025, and even that isn't going to cause home sales to magically come back to where they were in 2021 and 2022, but it's going to start picking up a little bit of steam.
Lane Harrison, CBC News, Toronto.